Look at the chart right now. Bittensor is trading between $310 and $330. The price action feels heavy. We have been grinding inside a descending channel for months, and Bitcoin looks exhausted around the $60,000 region. Most retail traders are looking at this setup and preparing for a breakdown. They see the resistance, they see the bearish divergence on the daily time frame, and they panic sell. But there's a massive, almost unprecedented disconnect between what the retail chart watchers see and what the raw, on-chain data is actually doing underneath the surface. What if I told you that while the chart looks sluggish, the network just successfully trained a 72 billion parameter foundational model on open, decentralized infrastructure? What if I told you that over 2/3 of the entire circulating supply is locked up and unavailable for trading? And more importantly, what if I told you that autonomous AI agents are right now, as I speak, buying compute on the network and creating a closed-loop economy that most people do not even know exists? The stakes here are incredibly high. If you misread this market structure, you risk getting shaken out of an asset that is actively integrating with NVIDIA and Intel to disrupt the global cloud computing oligopoly. You risk missing the transition from a speculative crypto token to foundational AI infrastructure. In this video, I'm going to strip away the noise. We are going to look at the exact on-chain flows, the subnet alpha outperformance, and the precise Fibonacci levels that dictate my strategy. I'll show you exactly where my capital is deployed, where my invalidation levels are, and why this specific consolidation phase might be the most critical juncture for Bittensor this entire cycle. Let us first set the stage. Right now, Bittensor, or TAO, is fluctuating in that $320 zone. If you have been following this channel, you know that this is exactly the kind of environment we look for. We are not chasing 60% green daily candles, and we are not panic selling when the 55 exponential moving average puts up a fight. We are operating on data. The broader market sentiment is incredibly fragile right now. We are seeing a lot of capital rotation and, frankly, a lot of exhaustion. Bitcoin is hovering in that $60,000 to $70,000 region, and it is showing distinct signs of weakness. I'll be completely honest with you. If Bitcoin loses that $60,000 support, it's going to be incredibly difficult for Bittensor to maintain an isolated bullish structure. The macro environment is dictating the pace, and the move we have had since the bottom is already extended. But why are we looking at Bittensor specifically right now? Because the infrastructure layer of decentralized AI is undergoing a fundamental repricing. We are seeing the separation of the actual utility networks from the vaporware. The volume data alone tells a compelling story. When you measure fully diluted valuation and monthly token trading volume, Bittensor commands the highest investor attention among all AI tokens. It's utterly dominating networks like Near Protocol, Filecoin, and Render. Liquidity in the crypto market is a black hole. It attracts more liquidity. The fact that Bittensor is absorbing this much institutional mindshare while the chart is consolidating is a massive divergence. But there's something deeply embedded in the technical structure and the on-chain metrics that changes this picture entirely. The fundamentals tell us why this specific price level matters and why the supply dynamics are creating a powder keg for the next major volatility expansion. Let us dive into the actual raw data. If you want to understand where the price of TAO is going, you have to stop looking exclusively at the root token and start looking at the subnet economy. This is where the real disruption is happening. The Bittensor subnet market capitalization is currently sitting at $1.3 billion. This is a secondary, high-beta economy operating entirely under the radar of traditional crypto investors. Let us talk about where the capital is flowing, because the one-month net flow data is staggering. Subnet 3, known as Templar, has seen an inflow of over 30,000 TAO. Why? Because they just achieved something that legacy venture capitalists said was impossible for a decentralized network. Templar successfully trained Covenant, a 72 billion parameter model, across over 70 independent contributors on open internet infrastructure. This fundamentally de-risks the entire protocol. It proves that decentralized compute can rival centralized server farms for foundational model training.
And it's not just Templar. You have Shoots on Subnet 64 handling serverless AI compute at massive scale. You have Targon on Subnet 4 providing confidential AI compute, and they have just been accepted into the NVIDIA Inception program, releasing a white paper written alongside Intel. Listen to that again. NVIDIA and Intel are directly interacting with a decentralized compute network. This validates the technical legitimacy of Bittensor to the enterprise sector. It's no longer a speculative game. But here's where the supply side gets incredibly interesting, and why it affects the price you see on the screen. Out of a total supply of 10.78 million, a massive 68% of all TAO is currently staked. That is over 7.3 million tokens completely removed from the liquid exchange supply. When you combine that with the fact that subnet alpha tokens are being burned to counter inflation, making the root tokens scarcer, you get a structural supply squeeze. Just in a single 30-day period, we saw over 80,000 TAO burned, equivalent to roughly $25 million permanently destroyed. This acts as a massive, indirect deflationary mechanism for long-term spot holders. And the demand side? It's not just humans buying the token anymore. The network has transitioned into an autonomous machine economy. We are seeing verifiable on-chain data of trading agents running constantly and paying for their own compute and inference by buying credits with their proceeds. Machines are generating organic revenue for the network. This is exactly why sophisticated capital is moving in. We are seeing actively managed funds, like Yuma's large-cap subnet fund, outperforming the root TAO token by 46% year-to-date. We are seeing high yields in decentralized finance, with wrapped TAO and Ethereum liquidity pools on Uniswap offering up to 594% annual percentage yield. This indicates massive demand for TAO trading pairs off its native chain. The cost curve thesis is playing out perfectly. Bittensor is undercutting the cloud oligopoly of Amazon Web Services and Google Cloud, and traditional venture capitalists are finally waking up to the fact that TAO could fundamentally outperform Bitcoin over the next 5 years. All of this fundamental data is incredibly bullish, but fundamentals do not manage your risk. Fundamentals do not tell you where to put your stop loss or when to take profits. For that, we have to look at the chart. Let us break down the exact technical market structure. Let us pull up the weekly chart for TAO USD. The very first thing you need to understand is the broader trend context. Since December of 2024, when we hit that local top around $750, we have been carving out a massive descending channel. I have drawn this with the orange dotted lines on the chart. We need to anchor our Fibonacci retracement levels to understand the mechanical behavior of this asset. I am anchoring the swing high at the $750 peak all the way down to the macro floor we established at $144 in October of 2025, which we successfully double-bottomed in February of this year, 2026. Let us talk about exactly what price action has done recently, because it's textbook market structure. About a month ago, price broke out of the lower channel support. It escaped my previous primary accumulation zone, which was that green box ranging from $120 up to $190. If you have been with me for the last 10 videos on this channel, you know that is where we built the core position. We blasted through the middle of the channel with a massive 55% green weekly candle. We then came back down, retested that midline perfectly as support, and headed straight up to the 382 Fibonacci retracement level at $375. And right there, we got rejected. A sharp rejection. But I need to be very clear here. That's completely normal. That's healthy market behavior. You cannot expect an asset to rally 160% from its bottom without finding sellers at major historical resistance. That 382 level is heavy resistance. So where are we right now? We are currently fighting the moving averages. On the weekly time frame, price is sitting above the 21 exponential moving average, which is the red line, and it is wrestling right on top of the 55 exponential moving average, the purple line. Holding above these averages is critical for maintaining medium-term bullish momentum. The closest macro support zone we have right now is the 236 fib level, which sits exactly at $287. Let us look at the oscillators because they are flashing a major warning sign for the short term. If you look down at the Fibonacci Relative Strength Index below the price action, we recently moved out of the neutral region and we are pointing to the upside on the weekly. However, if you zoom into the daily time frame, which I monitor constantly, we are in an extreme overbought territory. More importantly, we are printing a textbook bearish divergence. The indicator has made a higher low, while the actual price action has made a higher high. This tells me that the buying momentum is exhausting and a pullback is highly probable. This brings me directly to my execution strategy. I have made it clear that TAO is a long-term macro play for me. It currently represents exactly 3% of my total portfolio, while Bitcoin and Ethereum make up the core 65%. Capital preservation is always the priority. As I mentioned, my original long-term accumulation bag was built in that green box between $120 and $190. I'm absolutely not buying any more spot here. I'm loaded. My average entry is completely secured.
If you are just now watching this and you feel like you missed the train, don't panic buy into resistance. That is how retail loses money. What I would do if I were establishing a new position is look at the daily chart and wait for a mechanical pullback into the 200 simple moving average. I would establish a dollar cost average zone starting at $300, scaling down to $260. Your strict invalidation level, your stop loss, would be a daily candle close below $230. If it closes below $230, the thesis is momentarily broken and you preserve your capital. Target structures would remain exactly the same as mine. Speaking of targets, for those of you who built that position with me in the low hundreds, congratulations. The 382 fib level acted like a perfect magnet. We hit our second take profit target exactly at $370. I systematically sold 20% of my original position there. We also previously hit take profit 1 at $280. Right now, I'm still holding 50% of my original position. My rule is very simple. I'm considering a full close of the swing trade portion only if we get a confirmed daily candle close below the 55 exponential moving average. If that happens, I step aside. But regardless of the medium-term price action, I plan to hold roughly 20% of the original bag as a permanent, long-term moon bag, which I'll likely stake or deploy into a Uniswap liquidity pool to generate compounding yield. My remaining take profit targets to the upside are very clearly mapped out. They are the green circles on the chart: $500, $750 at the previous all-time high, $1,100 for price discovery, and the ultimate macro target at $1,700. By the way, if you are looking at this chart and thinking you want to trade these exact setups with me in real time, this is exactly what we do inside the Pro Capital Vault. I don't just post videos after the fact. Inside the private Discord community, you get real-time portfolio tracking, my exact to-the-dollar buy and sell zones before they happen, and direct access to me for strategy refinement. We also do a deep dive Sunday prep report to outline the entire week ahead. If you are serious about managing your risk and stepping up your execution, click the join button below this video to become a channel member, or use the link in the pinned comment to step into the war room. Once you join, just sync your YouTube account to Discord to automatically unlock all the private channels. It's that simple. Now, let us get back to the macro outlook. We have to synthesize the fundamentals and the technicals to build a real probability matrix. The network fundamentals have never been stronger. Bittensor is literally achieving what the biggest tech monopolies are trying to monopolize. The token burns, the subnet alpha generation, and the enterprise hardware partnerships give this protocol an incredibly high fundamental floor. But the chart is telling us a story of exhaustion. The bearish divergence on the daily Fibonacci relative strength index cannot be ignored, and the rejection at the 382 Fibonacci level was severe. The ultimate risk factor here is not Bittensor, it's Bitcoin. As I stated earlier, Bitcoin is looking incredibly weak in that $60,000 to $70,000 range. Crypto is a highly correlated asset class. If Bitcoin flushes below $60,000 and triggers a macro liquidation cascade, it will be nearly impossible for Bittensor to maintain its bullish market structure, regardless of how many tokens are staked or how many autonomous agents are buying compute. The worst-case scenario over the next few weeks is a breakdown below our $287 support, which would likely drag us back down to test the $230 invalidation level. The best-case scenario is that we find strong buyers right here at the 55 exponential moving average, we absorb the selling pressure, and we make another attempt at breaking the $375 resistance. My timeline for this asset is measured in years, not days, but my risk management is measured by the daily candle close. If the data changes, my thesis changes. Right now, the risk-to-reward ratio for new capital entering at current prices is moderate at best. The smart money is waiting for the pullback or carefully managing the positions they built months ago. Let the chart decide the next move. So, Bittensor is fundamentally excelling by locking up supply and proving enterprise-grade decentralized compute works, while technically facing a very normal, healthy consolidation phase after a massive rally. The bearish divergence on the daily suggests lower prices could be coming in the short term, giving patient investors a better entry point near the $260 region. Ultimately, your success with this asset won't come from predicting the next green candle, but from strictly defining your invalidation levels and taking profits at predetermined Fibonacci extensions. The market rewards those who plan for volatility, and it ruthlessly punishes those who react to it. Stick to your specific execution zones, protect your downside, and let the mathematical structure of the market do the heavy lifting for your portfolio. If you found value in this breakdown, hit the like button and subscribe to the channel for more data-driven market intelligence. I highly recommend you go watch my last 2 videos covering Bittensor, as this analysis is a direct continuation of the market structure we mapped out in those sessions. They'll give you the full context of how we built this position from the bottom. As always, remember that this is my personal market analysis and strategy, not financial advice. Capital preservation comes first. Much love for watching, manage your risk, and I'll see you tomorrow in the next one.